Stock investors are reacting negatively to the February personal consumption expenditure inflation report released by the government earlier today. I will simply refer to personal consumption expenditures as PCE here. The University of Michigan also reported its final number for March consumer confidence that was slightly lower than the dismal preliminary estimate that I discussed in a prior video, and that is feeding into the stock decline as well. The conference board also reported earlier this week a lower consumer confidence level in its survey. Before discussing the PCE numbers, I would simply note that the inflation data does not yet include the inflationary impact of the Republican tariff taxes on imports or the price hikes by domestic good producers of competing products that will follow. In the past, domestic producers have raised prices when U.S. importers of foreign products have been forced to pay a tariff tax. I will link a YouTube video from the Wall Street Journal discussing that subject in the More section below. I previously discussed it in prior videos. It will also take several more months before the inflationary impacts of supply chain disruptions caused by the tariffs and the massive deportations of undocumented immigrants who work in the U.S. supply chain to reach a meaningful level. I realize that nothing that I say here or in my blog will change what will soon happen. I can only respond by changing what I can control. And one of those changes is how much money will I have at risk in the stock market now, given my age and financial condition and my opinions about stock market valuations using traditional valuation criteria. The current dollar personal consumption expenditure for February 2025 increased by 0.4% compared to January. However, the month-to-month real PCE was just 0.1%. The real PCE increase from December 2024 to January 2025 was a negative 0.5% and at a negative 0.2% unadjusted for inflation. Month-to-month PCE inflation increased by 0.3% in February, with the core month-to-month increasing at 0.4%. Core PCE inflation was at 2.8% for the 12-month period ending in February, up from the 2.7% in January. As of 9/25 today, March 28th, when I last looked, the CME FedWatch tool has the probability of at least a 25 basis point cut in the federal funds rate at 71.7% on or before the June 2025 meeting, up from 65.5% yesterday. The odds that the federal funds rate will be 50 basis points lower than now on or before the December meeting is currently at 85.9%. If there are two 25 basis points cuts on or before the December 2025 Fed meeting, which is being predicted in the federal funds futures contracts now, the FF range would be at 3.75 to 4%. Short-term interest rates will, of course, quickly adjust to reflect the lower federal funds rates. I view the Fed rate cuts as, if they occur this year, as likely to increase inflationary pressures when there are already factors building that may cause stagflation in the United States. Trump also plans stimulative fiscal policies like cutting taxes on overtime tips and Social Security benefits. When combining both monetary and fiscal stimulus, when there are already significant inflationary forces building, that would increase inflation from current levels would contribute to even higher inflation numbers. Similar, but not as bad as what happened in 2021 to 2022 when Fed monetary policy and fiscal stimulus policies combined with the supply chain shocks and a fast surge in consumer demand post-lockdowns and the pandemic-induced recession. Fed money creation also contributed to that prior problematic inflationary period. This time, the added inflationary pressure that will result from the Republican tariff taxes will happen in addition to those other pressures. It is a regressive form of taxation that falls disproportionately on the bottom 3 quintiles in household income, including those 40% or so of households who do not pay federal income taxes. Those households will be paying the Republican tariff taxes, and their prices for purchases will be going up. They will be paying the tariff taxes even though they don't pay any federal income tax. And it doesn't matter to them if Trump cuts their tax rate for federal income taxes because they don't pay it now. Everyone who voted for Trump knew or is presumed to have known that he was going to impose tariff taxes and start a trade war. The vast majority of Republicans support those taxes, possibly believing Trump that the Republican tariff taxes will be paid by foreign countries and not by the U.S. consumers or by them. All of these voters do or are presumed to have known that Trump would start a tariff war with Canada. You would have had to been in a bunker without any internet connection or news for the year prior to the election to be unaware that he was going to impose these tariff taxes and start a trade war.